Investors have long known the importance of financial capital as an essential resource for society, the economy, and investment returns. Today, investors are more aware than ever that all forms of capital, including natural capital, are important for long-term sustainable growth. Governments, regulators, and investors alike are all looking not only at climate change as an important financial risk to investment, but also the role of biodiversity. But what is biodiversity and what role should it play in investment thinking? My name's Alex Whitebrook, ESG Communications Manager at Minerva Analytics, and today in this first ever Minerva Briefing on Biodiversity and Stewardship, we're going to be answering just that question and showing you how you can be a better steward around biodiversity. Minerva provides trustworthy data and insightful reporting for sustainable stewardship. So, let's jump right in. Okay, so these are the topics we'll be covering today, starting off with a brief explanation of biodiversity and why it's important, and then looking at the latest developments and how you can become a biodiversity steward. Very, very simply, biodiversity means the full range and variety of living organisms on Earth. Any reduction, as it says here, to the quantity, quality, or resilience of ecosystem services from biodiversity loss poses a significant risk to investors in many sectors. Some would argue in every sector. Biodiversity is important because it's a key health indicator for the ability of the biosphere, which is the global sum of all ecosystems, to provide the natural capital our society and economy depends upon. When biodiversity loss occurs due to activities like deforestation, the biosphere loses value, and events like this pose a financial risk for more than half of the world's GDP. That's about 44 trillion US dollars. Its importance is underlined by its recognition in the UN SDGs, seen here in the SDG wedding cake, which shows SDG 14 and 15, life underwater and life on land, making up half of that biosphere segment at the base, forming the foundation which the rest of the SDGs depend upon. So what have been the most recent developments in biodiversity and investment thinking? Well, there's been a lot of discussion around biodiversity in recent times. We've had the Dasgupta review recently released on behalf of the UK Treasury. The EU taxonomy is also coming into effect gradually, and that's going to have some implications for biodiversity in investment thinking. And of course, there's the Task Force on Nature-Related Financial Disclosures, among other things that we'll have to consider, and I'll go over in the next couple of slides. The increasing awareness of biodiversity as a risk to investors has brought the conversation squarely into the finance sector. The release of the landmark Dasgupta review on the economics of biodiversity in February 2021, commissioned by the UK Treasury as I mentioned, will have a huge impact on asset managers in the long term. The 4 key points the Dasgupta review makes, written by Professor Dasgupta, are: GDP does not account for the depreciation of natural capital as a major constraint for long-term value creation. This is not to say that GDP is not important, but that it doesn't take into account long-term thinking. The finance sector also has a responsibility to develop better biodiversity metrics. Companies should probably pay for ecosystem services in some way down the line, and asset managers need more education on biodiversity and must move towards positive screening for net positive contributions. And that's what we're here to help you with today by becoming a better biodiversity steward. Other initiatives that will likely be informed by the Dasgupta review include the upcoming UN Convention on Biological Diversity, COP15. This will be a meeting where the post-2020 Global Biodiversity Framework for governments will be agreed upon, and then further discussed, no doubt, at the UN FCCC's COP26, where nature-based solutions are already a hot topic of discussion. These global initiatives will quickly make their way into national and regional regulations in the coming years. But the changes being pioneered by these global conferences and governments are starting now in the investment sector. The EU taxonomy will require investors to explain their contribution to biodiversity conservation and the biodiversity risks they face, and the Task Force on Nature-Related Financial Disclosure is gradually developing a framework for financial institutions to be better biodiversity stewards. On top of that, the Nature 100 Plus initiative from the Finance for Biodiversity Pledge Foundation is also building momentum, with 37 signatories, including Robeco, HSBC Global Asset Management, and Minerva, all committed to collaborate, engage, assess, set targets, and report on biodiversity by 2024 at the latest. If we've learned anything from the development of climate change and other ESG regulations, investors need to start thinking about how biodiversity complements their stewardship strategy. 9 out of the world's 10 largest fund managers are already gearing themselves towards biodiversity reporting, with public support expressed in their annual reports or directly on their website. But a policy is just the start. As with ESG and stewardship, so it goes with biodiversity, and we hope to see active reporting with more fund managers in the near future. So, what should you be thinking about? With the financial importance of biodiversity made clear, what can investors do now, and where is the data? Minerva has conducted some research on the current state of biodiversity data, and we are prepared to recommend some of the best ways for asset managers to become biodiversity stewards. There are many questions surrounding biodiversity data. Where is it? Can it be trusted? Can we quantify the risk? And what can we do to manage and mitigate the risk? Despite the concerns about ESG disclosures, there is a surprising amount of data available coming online. The data is out there, such as species population and ecosystem health data. What is now needed is for companies to translate that data into the appropriate asset and company level figures that would enable standard assessment of company performance and investment impact. Many of the global initiatives that are now underway, the TNFD, the COP15 2021, they will be a vital source for identifying key metrics that companies in different sectors can report upon and how governments can enforce disclosure. The data is not currently in a state for asset managers to directly quantify the risk in most sectors, but that doesn't mean that they can't take other actions. In the short and medium term, whilst the data is identified and organized for the financial sector, monitoring biodiversity loss as a high-level risk is the way to go. An increasing number of investors are already engaging with companies whose activities are known to affect biodiversity, such as palm oil suppliers. Shareholder resolutions on biodiversity-related issues are becoming more common, such as those regarding plastic waste and deforestation, so action is needed now to address those issues, though the data is lacking. There are 3 ways that Minerva can help investors integrate biodiversity into your stewardship programs. You can engage by adding biodiversity governance to your portfolio monitoring criteria. You can vote and engage investee companies on reducing negative biodiversity outcomes and work on stewardship approaches to creating positive biodiversity outcomes. Collaborate with your peers as well to encourage and enhance environmental financial disclosures. The second way is to allocate capital to sectors that are known to be proactively reducing biodiversity loss or contributing to ecosystem restoration. Consider green funds, bonds, commodities, managed in accordance with certification schemes that support strong biodiversity standards. Consider using the SDGs as a core ESG framework. And of course, educate policymakers, especially as they negotiate the post-2020 biodiversity framework. Incorporate biodiversity in your own training materials, and explore new tools to understand how investments and biodiversity affect each other. Minerva, together with our strategic shareholder Solactive, is ready to help fund managers integrate biodiversity into their strategies with a range of ESG and SDG aligned tools and data. If you want to find out more about the information we've condensed for this brief video today, please check out the full report available in the download link below, and you can email us by saying hello@minerva.info. Thank you very much for watching this very first Minerva briefing on biodiversity and stewardship.